Hey, what's good, y'all? It's C Will, and this is the Passive Income Network. On this podcast, we talk about investing in assets that produce passive income. Make sure you hit that like button, subscribe, and leave a comment and say what's good. On this episode, we have a special feature with Gabi. He's going to come on and talk to us about the market, investing 101. We'll talk about trading and a few other things. Then we'll end with some hot picks of this year that we're going to be keeping an eye on. So, without further ado, let's bring Gabby on the show. What's
Hey, what's
good?
up, man? How you been?
I'm well, man. Excited to get with you on this show and
All right,
bring some information to the audience and to the people.
let's do it.
Yeah. So let's start off a little bit. You want to introduce yourself so they can get to know you quickly, and then we'll just get on to it.
Sure. My name is Gabi Datu. Basically, I am in international wealth management. I've been in trading and investing since back in 2014. That's where I started my journey. I have multiple certificates and diplomas in economic, financial, fundamental, risk management, and wealth management as well. So basically, what I do is my whole life is about teaching people how to actually invest their money correct without actually losing, because there's always certain risks in investing. So you got to calculate the risk to reward ratio, and that's basically my job.
Excellent. I love it. It's a lot of information there for these people to dive in. It's gonna be great. A lot of certificates. I'm excited for that to bring you on. All right, let's get to it. So investing 101. So let's talk to the new investors and let's start them on the process. Let's talk about what they would need in terms of like a brokerage account and things of that nature. Start there.
Okay, so there are multiple ways to investing. People got to realize there are passive income investing, there's active income investing. So active income basically inclines that you have to be active in the process of making money, while passive income is basically having your money work for you. Now, trading and investing is a little bit different. People think trading is the same as investing, but it's actually not. Trading is a way of not passive income, it's an active income, because you have to study the market, you have to do technical fundamental analysis, also sentimental analysis, and then actually open your trades and closing them. So that requires a lot of management.
Hmm.
Now, passive income, on the other hand, is investing basically in shares, equity, bonds, cash markets, property. Now that's what I call a passive income. Now that's the main differences between passive and active income, basically.
Yep. On the
Uh,
passive
so
network, we like active income and passive income.
You should. Diversity is really like everybody should diverse their portfolio. It should
Yes.
have passive and active income, because in case something crashes, the other one can support that crash. That's basically the whole idea of having a portfolio. Even the portfolio is not also like about the passive and income. Even in passive income, you have a wide portfolio between shares, bonds, whatever. And in active income, you also have a portfolio, which is like trading, for example. And you're like, let's say you work in a job,
Yep.
you're also an employee. That's also considered active income. So all of that, it's very important to have diversity in your portfolio.
Okay, so let's start here. Oh, did we freeze a little bit? You back? So let's start here.
Yeah.
401k. So in the US, we have 401ks. These are our retirement accounts, like Roth IRAs and traditionals. Can
Mhm.
you break down a little bit about 401ks so we can start that groundwork with the people here?
All right. So there's this type of job in the world. It's called financial planner. Now, the function of the financial planner is basically to set up a plan for you to set up you like to set your goals for the future. Now, one of the main issues that basically the life expectancy of the human being has extended. So let's say people are working until they're like 55, then they go and retire. So they used to live for like up to 60, 65. So 5, 10 years, you need certain amount of money to actually survive that. You'll be able to save that up from your job. But the problem is right now, people are living until they're 70, 80, and even more.
Yep.
So you won't have enough money to actually sustain yourself for 20 or 25 years, which is a main big problem for a lot of people. And that's why we have retirement funds or retirement plans, basically, you can call it, like the 401k
Yep.
and so on. The idea of it, basically, if you're an employee, like you're working somewhere, okay? So there are three types of pensions that you can set up for your retirement. There's a personal one, which is basically you put your own money into investment, and it generates money and you compound on it. You keep reinvesting and reinvesting every month. The second one is called the employer sponsored retirement plan, which is basically the company where you work. They will actually sponsor your retirement plan. So you keep working there, and the company itself, they actually invest, they take a portion of your salary and they invest it for you on your behalf. And
Yep.
when you retire, you'll be getting that money back basically as a retirement plan. And the third one is called the governmental, which is basically the pension that you get from the governments, which
Yep.
is, I'm not gonna lie, it's very sad. Like in a lot
Pensions.
of countries, yeah, in a lot of countries, people get like between $300 to $400 to $1,000. That's not gonna be enough
Yeah.
to
And they're
sustain
gonna need
yourself.
food stamps and all kind of other support to go with it. It's tough out here.
Exactly, exactly. So that's why it's very important to start early with an investment or retirement plan. These
Okay.
are the main types of like planning that you need to have aware of for the future, because when you're let's say 55 or 60, you're not going to have the same energy, you're not going to have the same mentality or like, hey, no, I got to go to work, I got to wake up at 9, I got to come back at 7. You're just not. That's just the reality basically. So that's why you got to start investing early in your future.
So, another thing I like, well, I'm not a biggest fan of 401k because of the lockup. So as a young man as we are, we have a long time. If we got a 401k, we have to wait before we can tap into it. But I do know part of the 401k I do like is Roth RIAs. Could you talk more about a Roth and why people would want a benefit for having a Roth RIA?
So, according to my understanding, basically with the Roth and 401k, the thing is the locked period is different. So sometimes actually some funds like that won't have even a lock period. So you'll be able to access your money. And the returns on it is a little bit different than the returns in the 401k, because you don't know where the money is being invested in. All you know is that basically the government or the company that where you're invested are investing the money. You have no
Oh, like
access.
mutual fund. Mutual fund.
Exactly like mutual fund. So you have no access of what they're investing in. And this could be an ethical problem because there's something that's called responsible investment, which is
Yep.
basically have three major rules, which is like environmental, social, and governance.
Yep.
Environmental
ESG.
basically, exactly.
Yep.
So the environmental is basically the impact on the environment. Social is the social workforce, like their morale, their life situation, and the governance is basically like the senior director and the staff board, the diversity in the company from age to gender, and so on and so on.
Yep.
So having access to your money at any certain point does have a great value, especially because sometimes like a problem could happen with you and you need extra money, which
Hmm.
is really good. But at the same time, it does have a lot of risk. Is basically most of these funds, when you invest in them, if you actually withdraw your money earlier, you will actually be charged a penalty.
Facts.
And that, yeah, and that no, it's different from the tax actually.
Oh, I
You
said
will be
facts.
taxed. Ah, sorry, I heard
I'm
tax.
disagreeing.
So yeah, so the penalty can sometimes could be actually very large. And not only that, in certain funds, you actually might not get the percent that they actually calculated or accumulated over the, I don't know, the time period that you
Yep.
invested in.
Yeah.
So that's the main issue with funds like that. But it is good to have a plan for the future. You got to understand something. If you're actually putting money for your retirement, you got to think about it. It's like this money you cannot touch. Like you lost this money, you'll get it back around like 55 or 60, whatever you retire. But
Yep.
like don't think of it as like I have money there. No, you don't.
Yeah.
Just don't think about it. Just
It's for the future.
exactly, just leave it there. It's for the future and manage somehow right now. That's the main
So
issue.
this is a great transition. So let's talk about it. I got two accounts I like to use. I have a Robinhood account if you got that over there, and then I like to use a TD Ameritrade. All
Okay.
right. So when we working at jobs, we just talked about the 401ks, and that's a good solution there. Most companies have matching where if you put in, let's say, or they put up to, let's say, 7% of whatever you put into your account, they will match it. And essentially, and if you got a Roth IRA in the US, you're also pre-tax money. It's already been taxed and you'll put that in there. So when we
Gotcha.
talking about our personal accounts now. So this is what people who want to invest for now, but also potentially sell these shares or these stocks in the next 2, 3, 4 years so they can have some money. Um, what do you feel about ETFs, exchange traded funds, and do you think that's a good vehicle for people to start with?
It is. ETFs are very helpful because they do give high returns than other investment. But there's a relationship everybody or every investor should remember is higher rewards means higher risks.
Yes.
Especially right now, like have you noticed in the last couple of years, like a lot of companies actually tried to create a Bitcoin ETF, for example, but
Mm-hmm.
they didn't get the approval from the from the SEC. That's a
Oh,
big issue.
GBTC or yeah.
Yeah, like that's a big issue because like higher returns, that doesn't mean like it's always, if it's good, if it's too good to be true, it's probably not, you know that saying.
Yeah.
So the problem is when you give high yields, you got to understand higher risk. There is a good chance you
Volatility.
might yeah, there's a good chance you actually might lose your money. But you gotta understand, this is why risk management in general is very important,
Mhm.
because a lot of people think like, hey, I can get 30% of this investment. 30% is an insane percentage to get up an investment,
Yeah.
because you might be like the normal investor might be thinking too small, like, hey, 30%, so if I put $10,000 I can get 3K a year.
Mhm.
But if you're like say a rich person, somebody who has millions of dollars, if
Yep.
that guy puts 10 million, he's going to get 3 millions. Now where's the company's going to generate 3 millions for this 10 million? It's all about quantity as well of the money itself.
Yep.
So that's why having high yields is good in your portfolio, but it should not exceed 10 to 20% maximum. That's if you want to risk it. Other return, like other investments, should be basically based around like 5 to 6%, maybe 8%, 10%, something like that. That's also
Yeah.
considered high. Like most of the banks usually give like 1 to 2%, which is very low.
Yeah.
So
And the
like 7
savings account,
8%.
yeah, maybe 0%.
Yeah, there's something that's called actually negative percentage, where basically you have to pay the bank to keep your money for you,
Yeah. Yeah.
which is a
Inflation
lot of
definitely hitting us too.
exactly.
Yeah. So, okay, let's talk a little bit about research, right? I
Okay.
think for the new investors again. So, if we're going to go research, what would you where would you start? Like for me, I learned to look at the S&P 500, the
Okay.
Standards and Poor 500, and these are the top stocks in the U.S. Stocks Exchange, New York Stock Exchange. But then I like to identify the top 10 and study those top 10 companies like Apple and Microsoft. Can you give some pointers of what people should study and kind of how?
Okay, so if you're gonna be mainly focused on equity, for example,
Yep. Okay,
investing in
let's focus
shares
on
and stuff.
equity for now.
Equity. So basically, the first thing you gotta study is fundamental analysis,
Okay.
because fundamental analysis takes a bigger part than technical in equities in general. Why? Because if there's might be a new product that's coming out for the company that could actually raise the price of the stock by a lot.
Yep.
Case in point, for example, before COVID happened, look at the stock prices of all the biochemistry like companies, for example,
Yeah.
Pfizer or
Pfizer.
whatever.
Yep. Yeah. Johnson and Johnson. And yep.
Yeah, exactly.
Moderna.
After COVID hit, like they extend in profit, which is insane.
Yes.
So that's why fundamental analysis and awareness about what's going on in the world is very important. Now, I understand there's a lot of news, there's a lot of stories, and
Hmm.
people can lie sometimes. I understand that. That's very factual. But let's say you're invested in 3 to 4 companies, and all of these companies are in the, let's say, technology sector.
Yep.
So basically, you make your research point a little bit smaller. So now all of your research should be focused on technology that are related to these companies.
Mm.
So if you're invested in a company that developing some kind of metaverse or some kind of, so VR set are going to be very important to that company. So if somebody actually came up with a really accessible VR set that is very good, that company's share would go in price. For example, Facebook was working on one. I don't think
Yep.
it worked out very well for
Oculus.
them.
Yeah, yeah. Well,
Yeah.
Oculus. Yeah, it didn't go that well so
Uh,
far. No.
I mean, yeah, so far we can't know anything for the future, but like a lot
Yeah.
of companies are developing stuff like that. So if you're like investing in stuff like that, fundamental analysis is very essential. Why? Because earning, you got to see how much dividends. So just to explain a little bit about the shares, when you invest in shares, there's 2 ways to make money from shares.
Okay.
First one is called capital gain. Capital gain, for example, let's say you bought Tesla stock at $100, you sold it for 150. Now that $50 is called capital gain.
Yep.
Now, in the United States, it is taxable. Where I live, I
They
don't pay
tax. I
taxes.
know. That's why I'm like,
I
no.
don't, I don't pay taxes.
Well, listen, yeah, they tax you. Let me just tell the U.S. audience: if you sell that stock, that $50 gain, as we just said, you will get taxed at least 20% in the US, and that's a short-term capital gains tax. If you hold that position for longer than a year, I think it goes down to about 15. But that's why I might be moving to Dubai. I don't want to pay no tax on that.
So the other way to make money from stocks, you as a shareholder, is basically, now you gotta remember, shareholding is a little bit different than trading.
Yes. We'll talk
Trading on
about
a
trading
brokerage,
next.
yeah, we'll talk about trading separate. So the other way is called dividends. Now, what is dividends? Basically, it gives that the money, when the company makes profit, they
Hmm.
got to distribute these profits, and they got to distribute them to who? To the shareholders.
Yep.
So they do it in a way it's called dividends, and that's how most shareholders actually get paid.
Yep.
The issue about dividends is it's not necessarily going to happen every year. So if the company is not performing well, they can
Yep.
actually have the decision not to distribute any dividends at all, which
Hmm.
could be a little bit risky, like riskier than other investment. But at the same time, we go back to the risk, like reward and risk ratio. In equity, you are actually gaining on two spots. So there's two ways for you, which is basically double the reward: the capital gain reward and the dividends reward. While in other investment, you're only getting an interest rate on your basically money or whatever.
Yes, exactly. My one of my favorite dividend vehicles, or actually, I'll name two companies. Coca-Cola, that's a dividend king.
They
No,
pay a
it's like
lot of dividends, yeah.
yeah, no matter what seems to be happening in the market, Coca-Cola on time has been paying out the money and also increasing. Then I also like real estate REITs. Some of them have been beat up right now, but they tend to usually keep paying. And these are real estate based vehicles. Gain stock, GAIN, Gladstone Investment Corporation, one of my favorite. And then they invest in different properties, and they like Realty. They rent out into places like Walmart and stuff like that. So
That's
those
good.
companies usually always pay their rent, which means if you own one of those REITs, you most likely, highly likely, to receive a dividend there. All right, let's transition a little bit into trading. I
Okay.
have people that be like, man, I want to make money every day, right? And what we're talking about, it was just long-term investing or shorter time frames, a few years out. So trading, can you break down trading? And let's just start with potentially like options or stock trading. Then we'll talk about crypto and Forex and some of the other opportunities out there.
Okay. I mean, we can sum them all up together in a way.
Let's do that.
Yeah, so basically, trading is you're buying an asset or selling an asset. I'm going to explain about selling in a bit
Mhm.
for a price, and you're waiting for that price to go higher so you can sell it for a higher price. So it's basically like capital gain. But with trading, there's something that's called leverage. Now, what
Mhm.
is leverage? Leverage, like in some company they give 400, in some company they give 1,000, some companies they give like two or three. It depends. So leverage is like one unit of your money equal this much of the company's money. So, like example, $1 for a 400 leverage that equals $400 for the company.
Yeah, that's crazy.
So, and you actually, all of the companies give you this leverage to trade with. Why? Because the leverage actually helps you gain a lot of profit, but at the same time, if you lose, you will lose a lot of money at the same time. This is why it's very risky to trade with leverage, but it is the way to trade. If you manage your risk correctly and you do your research, it
Mhm.
is the way to go. uh, the thing is that I want to say before I get into the trading section is uh, I just wanted to say it, I forgot it anyway. So it was on my mind, but it like slipped my mind basically. Trading is very good. Oh yeah, I just remembered. So to be an expert or to be like a functional guy who actually like or a girl like basically that want to generates money from any section in life, from was it in medicine, engineering, whatever, you need to devote time and
Mhm.
effort to learn that trade. Whether it was a doctor, like doctors need to go like 7 8 years until it's considered a normal doctor. It's not even
Yep.
specialized in anything. So the mindset that people want to change is I cannot go into the trading scene in 1 week and make money. It might happen. Yeah, okay, might happen. But you cannot have that mentality. You need to actually have a certain amount of your time invested in this, which is basically by learning fundamental technical analysis and sentimental analysis.
Mhm.
And whoever is somebody tells you, hey, just follow technical analysis or just follow fundamental analysis, just follow sentimental analysis, I would stay away from people like that. You need to combine all three of them.
What's sentimental analysis?
Sentimental is the sentiment of the market. So let's say the market is bullish on Bitcoin. Everybody's buying Bitcoin. That
Right
actually
now,
there's
like
more.
right now.
Yeah, like this is what you see happening in great dumps in the market. Like notice when somebody starts selling, the whole market just crashes, and it doesn't crash on like just Bitcoin. Like the whole crypto
The
market
whole
crashes.
market, yep.
Exactly, and
Every
that's where
coin.
the sentimental analysis actually take part. So like you can actually trade cryptos on sentimental analysis alone, because we noticed in the last couple of years that crypto is kind of moving together. If you notice, like most of the time, either the market's going up and all the coins are going up, or the market is going down.
Yeah.
So you can take your
Yeah.
pick from there and trade on it.
Yeah. So, because what I realized too is that, yeah, if Bitcoin, whatever Bitcoin is doing, the whole market is pretty much going to follow suit. But there's levels to it. Now you got,
Exactly.
yeah, like a Ethereum will move closer to Bitcoin, but then you got some far off all caps. Like I seen your post, Solana went crazy in the last
That's
few
true.
days.
That's
Yeah,
true.
so I missed that one. I wish I would have did some trades on that one. Um, but yeah, so that's what happened. But at the same time, I made a trade on Algorand because it also was running not as much as Solana, but so everything goes with different levels there. You
So
can
now, did you trade with leverage or without, for example, on your algo?
only 3x leverage.
See, that's good. So
Yeah,
basically, you tripled your amount that you invested in that
yeah,
basically trade.
basically,
That's
yeah.
that
So
that's a good thing about leverage. When you hit it right, you hit it big.
yeah, yeah. So I've been doing small amounts, so it's nothing life changing. I'm trying to keep trading as just as you said, it's a skill. It's a skill set.
Exactly.
So something that you got to basically work on every day, every week, like a carpenter got to study to make sure that you got your measuring sticks right. That's what we
True.
use with our technical analysis. Um, so let's go into some crypto talk a little bit more as well.
Okay.
So yeah, when you are so with crypto, are you seeing crypto more as a long term investment vehicle, or you're more into trading it, or a combination of both? What you feel about
It
crypto?
is a combination of both, to be honest. So long term investment in crypto turned out to be very profitable.
Yep.
Like crypto is a very young market. Like it started back in 2010, 2009, and most people didn't actually understand what crypto is.
No,
But
not yet.
a lot of the big names started investing in crypto back in 2014, 2013, which is the main player that actually made a lot of money from crypto invested in crypto back in 2013, 2014. Now it does have big potentials for the future. Why? Because you notice now every big company is going into crypto. Not only that, even governments right now are creating their own cryptocurrency,
Shout
which
out
is
to China.
not just China, Australia, the United States is working on one,
Yep.
India, a lot of the big countries are actually working on that. Now, it does have some restrictions to it. Some people are against it, but we're not going to get into the political side of it. But it is, if you notice, a lot of the countries, a lot of the big names out there are working into the blockchain technology. So that tells you that there is big high hopes for crypto in the future, especially if it's a long-term investment, and
Yep.
especially if it's coin like Bitcoin, because Bitcoin is like technically the only, I would say, really decentralized uh,
Yeah. Yeah, I would say
currency.
Bitcoin is as well. Bitcoin. It doesn't have also just some business or company that is managing it. So that's a
Exactly,
good.
because governments can enforce laws on certain companies, even though it doesn't go again. Like, for example, let's take Zcash. Why
Hmm.
is Zcash very attractive for a lot of people? Because it hit the whole point of Zcash is privacy.
Yep.
So when I send you money from my wallet to wallet, nobody else can see how much money is sent. Even if they go on the blockchain, they can't see that because they send it through
They
Zcash.
just know that there's a transaction that happened, right?
Exactly. From this
Yes.
wallet to this wallet. That's it. They don't know the amount, how much, whatever.
I
They
like
don't know
that.
any details. It's
Yeah.
really good. So like
Yeah.
it's decentralized. It's the meaning of decentralization. But the problem is Zcash is a company after all. And they will have a certain place, certain IP servers, whatever, whatever. The
Yeah.
government can enforce laws to change that. Now with
Yeah.
Bitcoin, because nobody actually knows,
Satoshi. Shout out to Satoshi.
like that guy just invented a unicorn. Basically,
Yeah.
nobody knows what it is. Nobody know what. So basically, there's no control over Bitcoin.
Yeah, and that is like truly why I like Bitcoin. It is a borderless currency. I see like Bitcoin, and let me know what you feel about it or if you agree. But I see like Bitcoin for me in terms of like assets in the crypto world. It's like if you buy Bitcoin, it's like participating in buying a house or like real estate. right? And then I see like some of the other coins like Algorand, Solana. I see those like cars and things like smaller assets in the physical world that are easier to move around and trade. Um, yeah, it's basically how I see it.
Yeah, I understand what your
You
point
get
of
what I'm
view.
saying? Like
Yeah,
you
yeah. Bitcoin
guys
is like
also
we don't
Bitcoin.
use Bitcoin very much.
You
So
don't even
notice,
yeah,
yeah, we don't use Bitcoin the way that's actually intended, which is
yes,
basically like as a payment system or whatever. Like, but big companies like MicroStrategy or even in El Salvador and a lot of Latin
yep,
country, they actually use Bitcoin to pay and whatever. It's like in a matter of seconds.
yeah.
So we don't actually use the Lightning basically blockchain that is designed for Bitcoin that much. We just think about it
You
as
hold
an
it.
investment vehicle. Yeah, it's an investment
Exactly. You hold
vehicle.
it. But I
But
use like if we go to Ethereum or Algorand, I use it, so it's different.
exactly,
Yeah.
exactly.
Yeah.
Especially with Ethereum and Algo, like you can buy NFTs with it, you can buy other coins with it. You can actually also pay for stuff with it because it is a payment system after all. So there's a lot of usages for. Even you can stack it, for example, right now with the Ethereum 2.0, basically stacking is very widely. Even MetaMask announced, I think it was yesterday.
Lido staking. Yeah.
Yeah, so they have staking inside their platform, which is very good because it will allow people not to send their like Ethereum to a different wallet or connect it to a different wallet. No, it's inside the custodian wallet itself, which is very, very good.
Yeah, it's impressive. Okay, let's talk about some hot picks for this year, or what coins, stocks, or any of these commodities, bonds. What are you watching this year to as an investor and trader?
Okay, so let's talk about crypto first.
Okay.
The main thing you gotta watch is Bitcoin because level Bitcoins is very important to other current currencies as well. The
Mhm.
second biggest coin that I'm watching is probably gonna be Solana. Now, Solana suffered a lot right now because of the FTX issues and
Yep.
all of their reserve, most of their reserve were in sold, which is a big issue. That's why the price dropped from like $240 to almost $98.
Yeah, that's
And
crazy.
even if you check my social, I think it was like last year, Solana was around $19 or like $18. I was telling people to buy Solana. This is before the big jump.
Yeah. Yeah. I wish
Then it
I would have
jumped
been following you then. I'm like,
then it jumped to like 80 and I was like if it breaks the 100 line, you should actually reinvest, like buy.
yeah.
It's
It
not
went to
high
like
now.
200, I think, or something.
240, yeah, like that's a big movement. So Solana is definitely on my radar. The third one would probably be Ripple, but I don't know what's the potential growth for Ripple right now. So as you know, there's a big court issue with Ripple and the SEC.
SEC. Yeah.
Exactly. We are hearing a lot of rumor that the Ripple company, basically Ripple Labs, will be winning the court case right now.
Hmm.
Now, the main issue with the Ripple dump, like for example, I bought Ripple back in 2000, I think 18 or 17.
Mm.
They were at $3,
Yeah. It's
and like right now it's tough for me with the Ripple, but I still love the concept of it because Ripple basically is building a financial system that can replace the Swift banking system.
yep.
Swift banking system is basically the system that all the banks use to send money to each other. That it can actually be, it's going to replace that system. It's going to be more cost efficient, time efficient, and just basically better. So
Speed. Yeah. Too.
exactly. So they are working on a very interesting concept of a system, and certain countries are also, I think, like the Bahamas. I don't remember what other countries actually did a contract with Ripple to develop their financial system. So Ripple is definitely on my radar. Um, for a fourth coin, there's a little bit of coin that are actually like in a matching zone. For example, like Matic and Cardano,
Yep.
because they do show huge potential for actually movement in the market. They are building product. They have a functioning blockchain. They have NFT marketplaces, a lot of utility, a lot of tools that you can use on those blockchains. So these are kind of similar to me. And the last coin that I would actually keep my eyes on is Avalanche.
Mm.
Now, Algorand kind of sits with the Matic or Cardano kind of levels because they are very like under $1. So this kind of investment can be a big potential win. They're
Yep.
all building, everybody's building on them, but it's going to take time to compete with the big guys. But Avalanche right now just announced a big partnership with Amazon.
Amazon. Word.
Yeah.
Okay.
So like
Break that
like
one down.
Avalanche in the last I think 2 to 3 days actually did 40% increase in profit
Yeah, I should have been
alone.
trading that one too. I need to watch out.
So yeah, like the big partnership with a company like Amazon, everybody uses Amazon. Everybody orders
Yes.
their stuff on Amazon. So if they actually came up with this financial system where you can use crypto as a payment for Amazon, it's going to be just really big for the project itself, for the Avalanche project itself, company itself.
Yeah. Avalanche, definitely they doing something with Amazon. That's something you got to watch. Anybody that's working with Amazon, got to watch him. And I heard also, I got to double back on it, but Amazon or Avalanche is working with a big chess online, I believe it was online chess tournament and game. So that's another move that I think will be beneficial to Avalanche and the ecosystem. Because I'm seeing too Polygon. You mentioned Polygon. They're working
Polygon.
with Starbucks. They have a lot of partnerships.
They do. They do. They actually are working with Starbucks, which is actually quite good. I mean, the reward system is going to be very similar to the normal one, but it's going to be on a blockchain basically based reward
Yeah.
system.
And that's the thing about crypto is that what I like is that it's not, if people allow themselves to just understand is that what you just said, like Starbucks has a reward system. So essentially inside their company, they basically have tokens that they're giving you. It's like gift cards and whatnot. But you
That's
can
true.
easily replace that with blockchain technology where you can then essentially hold your gifts and your tokens inside your wallet. A lot better than holding a plastic card,
And
basically.
not only that, it actually opens up other markets for that tokens. So
Mhm.
those tokens become actually tradable. So you can actually trade these tokens for like Bitcoin or Ethereum or wherever. So you're actually like involved in a company that has nothing to do with the financial system other than like what they're earning basically, but they're opening to a new financial market, which is the crypto market. And from there, because the crypto market also connects with trading, with Forex, with stocks, whatever, so you're unlocking all the financial markets into this company that basically makes coffee. Of course, they do make a lot of money because they have a lot of branches, let's be realistic, but imagine the possibilities of the Starbucks, for example, reward like token will be $2. It
Mm.
was like a
Double
week
up
ago
the
it was
value.
$1, now it's $2. So
Yep.
people who want to buy coffee that used Starbucks, they can buy the token online now for $2. So that's big profit also. People can start trading on that kind of stuff as well.
Yeah, it's what I like is that cryptocurrency technology, blockchain is making everything tokenized. Everything will be tradable eventually. Your time will be tradable. Like everything is going to be tradable with this tokenization. I think that's dope. Yes. So
Yeah,
let's
that's
slowly
very
start
cool.
to close out with two more things.
Sure.
So again, back to the new investors. Can you give a little advice of, I say, hey, I'm just getting started. I'm interested in growing my money. Can you just give them a little intro advice of where they should start?
Sure. Okay. I would start with basically bonds or equity. That's the place to start. This
Okay,
is if you're looking for a long-term
long
investment.
term. Yeah, let's
That's
talk
a,
to long term.
exactly. Property is a little bit hard, especially investing in real estate, because there's like direct property investment and indirect, which basically like RIT, real estate funds
Funds.
trust.
Yep.
Yeah. So basically, it's a little bit different, but it's a little bit harder. But like if you're looking for a long investment run, I would go with bonds or equity or whatever. The second is if you're looking to start making money right now with tradings, the first thing I would recommend is learning technical fundamental and sentiment. Sentimental analysis is very easy. Like, hey, everybody's buying, let's buy. Everybody's
Yeah.
selling, let's sell.
Yep.
Fundamental and technical analysis is a little bit different. Now, technical analysis is very easy to learn. There's a
Mhm.
lot of videos out there. I have a couple of seminars also on my YouTube. Like there's just information everywhere that you can learn. There's a lot of indicator that helps you and indicates basically the indicator indicates how the market is moving before it happens sometimes, but there is a lag issue. You can fix this lag issue by studying fundamental analysis if you're invested in stock.
Yep.
Fundamental analysis, I repeat, it's very important to combine it with technical analysis to make sure you are entering in the right time and exiting in the right time, because after all, nobody wants to lose money, everybody wants to make money. So what's the point of actually you just throwing your money there if you're not actually putting the effort to learn these things? Now
Yep.
if you're interested in, like, for example, trading Forex is basically currencies of the world. Now you got to start learning about the world, like what's going on. Like notice like the war in Russia and Ukraine, the poverty here, the problems here, that this oil rig stopped working. Now this is a
Yep.
little bit different. The fundamental analysis is in a very large scale right now
Global.
for the
Yes.
Ford. Exactly. With stocks, it's a little bit it's easier. I mean, okay, you look at the sector. How's the sector is doing today? Like the sector is up. Okay, that's good. And you look at the fundamental of the company itself, how much earning they're doing, their growth, their net, the tax, all these
Yep.
information. You have a better understanding. Yeah, this is a good investment for me. And also look at I would suggest 5 years, maybe to 10, the historical data of the company itself.
Yep.
So how much did they actually perform? How much dividends did they pay? How much? All of these are very important. I guess that's
Yeah.
probably my
I think
advice
that's
for new investors. Yeah.
yeah, it's a lot. So make sure y'all double back and listen to this advice again. Tell them folks, Gabi, tell them folks where to find you. And yeah, just tell them where to find you. I know you're on Instagram, but can you give them your Instagram or wherever else you want them to reach out?
Yeah, sure. If anybody has any question or anything, they can reach him on either on Instagram or my Twitter. My Instagram, I think it's Gabi. I'll just send you the name. You'll link it
Exactly.
later. It's gonna be hard for them to pronounce it.
Yeah. I'll put it in the description right here. So again, y'all, this is the Portland Dubai connection. Look out for more of these episodes. We're gonna be breaking things down. I'll pull up some charts and stuff like that. I'm gonna pull up one chart. I do want to show them this because this is a perfect example of where'd it go? Of a sentimental analysis, right? I like to look at this one. Can you see this screen?
Yeah, that is a sentimental analysis. It's called the VIX index or the fear and greed index.
Yeah. So this one here right now, it went up because of the market, as we just talked about. We're getting closer into the green, which is closer away from the fear. But if you notice, last week we were at extreme fear. Right now we're at fear. So Solana, as you said, went up. Algorand, Bitcoin, Ethereum, the whole market pumped in this last few days. So that's what we talk about when we say sentimental.
One advice using the fear index: stay away from the high green at the end. At the high green, it's very green because remember, market goes in cycles. So like fear, greed, and it has like layers to them. But when in your like the super greed zone, that means the market actually reached its peak. And people will do to sell, so you don't want to buy there. You want to actually sell.
Watch it. Then I'll pull it. Let me see if I can pull it up right here. This will match it up to where to go. Last year. Oh, boom. So, I'll share this one. So when we talk about fear and greed, if you look at this chart where my mouse is, that was about where the fear and greed index was last year. When Gabi talking about green, that was when people was like feeling euphoric and everybody's like Bitcoin gonna go to 100,000. That's when the fear and greed index was looking green.
It was around 95 basically.
Yeah,
it was around
yeah. So just looking at that fear and greed index, that's a kind of a sign where the market's at. So again, when it was in super red, that's when people thought Bitcoins are going to go to 10,000. It was around what 12, 15,000 when it was in really red. So that's something to pay attention to, y'all. All right. This was a great episode. I appreciate you, Gabi. I'm going to do an outro. Stay behind and the scenes, and I'll talk to you in a minute.
All right, man. Take care.
Yep. All right, y'all. So that was a great episode breaking down investing 101. We talked about what trading is, broke down some commodities, bonds, and some hot picks. And then we showed you a sentimental chart so you guys can get a deeper understanding there. Make sure y'all follow Gabi. I'll put the info in the description and look out for more information and episodes like this. Again, see Will with the Passive Income Network. I am gone. Go to work to buy more coins. Feel like Cameron. Oh boy. What you gonna do next? I might buy me a jet. Take a flight to Dubai. Algorand in the sky.